Good afternoon. I'm Carlos Bernales, Policy Analyst at the Vegas Chamber. I'd like to thank you all for tuning into our conversation with the U.S. Chamber of Commerce, Executive Vice President and Chief Policy Officer, Neil Bradley, and Vegas Chamber President and CEO, Mayor Beth Sewald. Before we get started, I want to take a moment to explain some features of this call. In order to preserve high sound quality, we will be muting everyone on the call besides our presenters to make it easier for everyone to hear. If you'd like to ask a question, there are a few ways you could do so. If you're joining this call on the web and through the mobile app, you can ask a question by using the chat feature on the interface. We'll ask you a question on your behalf. You can also ask a question by clicking the hand raise button on the interface. We'll call your name and unmute your line so that you can ask your question. Once you have asked your question, we'll remute your line so everyone on the call can hear the answer. In order to preserve time, we ask that you please keep questions brief and we'll be taking all questions at the end of the call. And now please welcome Vegas Chamber President and CEO, Mayor Beth Sewald.
Thanks so much, Carlos. Good morning, everybody. It's good afternoon now, just a couple minutes afternoon. Thanks, everybody, for joining us today on today's teleconference with U.S. Chamber of Commerce Executive Vice President and Chief Policy Officer, as Carlos said, Neil Bradley, regarding the CARES Act, which was recently passed by Congress and signed into law by the President. This webinar is intended today to really provide Nevada businesses and employers with a federal update on the CARES Act and its impact on Nevada's small businesses and nonprofits as well. And I really thank you, Neil, for being with us today. We welcome you. Before I introduce you really quickly, I want to ask everybody to please mark your calendars for our next teleconference, which is tomorrow, Thursday, April 9th at 11:30. As well, we'll be hosting a webinar with 5 Nevada credit unions regarding accessing emergency capital. So you definitely want to join us for that call. Now it is my pleasure to introduce U.S. Chamber of Commerce Executive Vice President again and Chief Policy Officer Neil Bradley. Neil has spent 2 decades working directly with congressional committee chairs and other high-ranking policy makers to achieve solutions. He oversees several major policy divisions within the Chamber economic policy, and we're just so thrilled to have you today, Neil. We really appreciate your time, and thanks for being with us today.
Well, thank you, Mary Beth. It's a pleasure to join you all, and I'm looking forward to walking through a little bit about what's going on with this federal aid legislation and then jumping in to your questions. I have a slideshow here that I'll be walking through. For those who are tuning into this, don't worry. If I go through it quickly, the slides are going to be posted to the Las Vegas Chamber's website after this, so don't worry if you miss something or miss something that I say here. I also understand they'll be posting a recording, so you'll have the opportunity to circle back on any of those things. So today we're going to focus on the Federal CARES Act. This is the legislation that was signed into law about a week and a half ago, and it's the major proposal supporting individuals, families, and businesses as we go through this coronavirus pandemic. Let me just quickly start with a quick overview of the major provisions of the bill and for individuals. This is a $2.2 trillion package. You will sometimes hear referred to it as $4 trillion or an additional $4 trillion, particularly if you're happen to be watching Larry Kudlow, who's the president's top economic advisor. One of the reasons for that is one of the provisions of the bill, which we'll get into a little bit later, authorizes the Treasury Department to invest in programs at the Federal Reserve, which the Federal Reserve can then leverage 10-to-1 to provide even additional support for the economy. This is often referred to as the Phase 3 bill because it was the 3rd coronavirus bill that was passed by Congress and signed into law. Important for families and individuals is the automatic payments that are made to taxpayers under the bill. It is $1,200 per individual, $2,400 for a joint return, additional $500 per child. This comes automatically to you. It is phased out with incomes above $75,000 for an individual or $150,000 in joint income. This will be based off your most recent tax return. If you've already filed your 2019 return, that's what the IRS will use. If you haven't, don't worry, they'll use your 2018 return, and they expect within the next, I guess now, week and a half to 2 weeks to begin making direct deposits. So if you have your refunds, for example, direct deposited, that's how they'll get the money to you. If not, if you don't use that direct deposit mechanism, you can check on the IRS's website about the ways to make sure that you receive your payment. As we saw last Thursday, sadly, record numbers of Americans are applying for unemployment insurance. This bill includes a significant expansion, both in eligibility for unemployment insurance, but also in the amount of the benefit. So for those of you who are familiar with unemployment, there are a lot of normal restrictions based on whether you've already exhausted benefits, how long you've been your employer, having to wait a week to claim benefits. If you're an independent contractor, you don't qualify. Almost all of those restrictions on eligibility are suspended if your furlough or layoff is related to COVID-19. In addition, the federal government's providing $600 per week on top of the regular state unemployment benefit, however that's calculated by your state, between now and July 31st. Importantly, lots of questions have been raised about, given the levels here, about individuals being able to stay on unemployment. In the same way that you can't quit a job, an individual cannot quit their job and claim unemployment, if your employer offers you the ability to come back to work, calls you back from the furlough or the layoff, then and an employee declines, they lose their eligibility for expanded unemployment. Importantly, even though there's a lot of federal money here and federal rules, the benefits are still provided through your state UI office. We want to now get to the kind of the heart of what we want to talk about today, and that's the provisions that are designed for employers. And we put these into three buckets: provisions that benefit all employers, provisions targeted towards larger employers, and then those targeted to small businesses, the self-employed, independent contractors, and nonprofits. So let's start with the provisions for all employers. One of the ones that has been overlooked, in my opinion, and if you are an employer and you haven't taken advantage of this, you ought to look and talk to your payroll processor about taking advantage of it now, is the ability of employers to delay the payment of their portion of payroll taxes between now and the end of the year. As you know, you write a check to your employee, you turn around and write a check to Uncle Sam for payroll taxes. Employers have the ability to keep their portion of that employer payroll tax, that 6.2%, and to pay it back to the federal government 50% at the end of 2021, so the end of next year, the remainder at the end of the following year, 2022. So this is a great way to immediately improve liquidity. Importantly, if you go for a Paycheck Protection Program loan, which we'll talk about a little bit later, and you have that loan forgiven, you lose eligibility to defer your payroll taxes. There's a number of tax changes. If you have net operating losses as a business, you now have the ability to carry those back longer and get those taxes remitted back to you. If you have AMT credits, you can accelerate the recovery of those credits. If you've hit your interest deductibility expense cap, now you have the ability to elect to have that cap raised from 30% to 50%. If you're in retail or the food sector and you've made improvements to your property, you may have realized, you probably did realize, that you weren't able to fully expense those because of a quirk in the 2017 law. All of those have been fixed. All of these are great ways to go to your tax preparer and figure out if you can gain access to additional liquidity today. Another provision available to all employers is called the Employee Retention Credit. This was added at the last minute in the Senate. It applies to employers who are fully or partially shut down as a result of a governmental order, i.e. these shelter-in-place orders. Or it applies if you've had a 50% drop in gross receipts in a quarter this year compared to the same quarter in 2019. If that applies to you as an employer, you're eligible for a refundable tax credit equal to 50% of the wages and health plan costs you pay for your employees up to $10,000, which is a fancy way of saying it's a $5,000 tax credit. Now, there are different rules about which employees, in terms of their wages, qualify. If you have more than 100 employees, the law says it only applies to employees not providing services. The problem is that the law doesn't define what not providing services is. So this is one of the issues that the U.S. Chamber, we're currently working with the Treasury Department and the IRS to clarify. In its strictest definition, that could mean that they're not doing anything at all, but you're continuing to pay them. In another definition, it could just mean that they're not doing their normal work. We hope it's that latter definition that provides more benefits to employers. If you have 100 or fewer employees, you don't have to worry about that. It automatically applies to all employees that you are paying during that shutdown or during that quarter where you've had a 50% drop in gross receipts. Importantly, if you get a Paycheck Protection Loan program, then you can't qualify for the employee retention credit. Now let's turn to the mid-size and larger employers. This is the least defined as of now. So the bill provides $500 billion for loans, loan guarantees, and support for credit facilities. A portion of that, $46 billion, is set aside for the airline industries, air cargo, associated businesses, as well as critical national security businesses. The remainder, $454 billion, is for the rest of the business community and employers. We expect, and in fact, just a couple hours ago, Treasury Secretary Mnuchin told the House Democratic Caucus on a conference call that he had with them that we can expect within the next 24 hours some type of statement out of the Treasury Department about what kind of program is being established to support lending to mid-size and larger businesses. So we don't have the details on that yet, but we hope to see them very soon. Understand that there could be some restrictions with taking this money. For example, limitations on the ability as a business to conduct stock buybacks, pay dividends, or provide executive compensation during the period in which you have a loan and up to a year afterwards. Now let's turn to the heart, kind of what's available for small businesses, the self-employed, independent contractors, and nonprofits. The heart of this bill is something called the Paycheck Protection Program. It's $349 billion in loans for small businesses and 501c3s with generally less than 500 employees. If you happen to be one of those businesses that is more than 500 employees, but you still meet the SBA's size definition through another criteria, you also qualify. If you happen to be in the accommodation or the food services sector, NAICS section 72, then there's an important rule for you in this bill. Normally, the way these programs work is that you add up all the employees that are affiliated together, franchises, etc., and you count all of them irrespective of if they're in different locations. This bill says for those folks in the accommodation and the food service industry, they're going to do your head count to count towards that 500 on a per location basis. That means a lot of folks who've never traditionally qualified for programs like this, if they're in the food service and accommodation, do qualify. It also applies to sole proprietors and independent contractors. Importantly, employers and sole proprietors were able to begin applying last Friday. Independent contractors, the self-employed, can begin applying this Friday. Where do you apply? You go to local and national lenders. This is a program that's run by private financial institutions, not by the SBA. What can you borrow? You can generally borrow your average monthly payroll cost times 2.5. So 2.5 months of your average payroll expenses, not to exceed $10 million. There are very minimal requirements for getting the loan. You don't have to provide collateral or a personal guarantee. And here's a really important point for small businesses. They don't want small businesses to have a big debt overhang, and they also want small businesses to keep paying their employees. So your loan can be forgiven dollar for dollar based on the amount that you spend on payroll, rent, interest on debt, and utilities during the 8 weeks after the origination of the loan. However, if that's your maximum amount of potential loan forgiveness, that maximum amount can be reduced proportionately if you reduce the number of employees that you have on your payroll, or if you reduce their wages by more than 25%. Understand Congress's intent here was to provide money to small businesses so that small businesses would keep paying their employees. We know lots of employers have already had to lay off or reduce wages. You can avoid the reduction in your debt forgiveness if you bring back your employees and have them back on the payroll and restore their wages and maintain them through June 30th. So there's the opportunity there to bring back your employees, pay them, and still get your maximum amount of loan forgiveness. This program has changed about 3 times as new guidance comes out of the SBA and the Treasury. We are updating our loan guide. It's at uschamber.com/SB loans, and you can learn a lot more about the process and how these calculations are made about your loan amount and loan forgiveness. Another program eligible for small businesses is called the Economic Injury Disaster Loan. If you've ever had a natural disaster and applied for an SBA loan, you're familiar with this program. It's the traditional program. It's just been expanded. In this case, it's in addition to small businesses, they've added nonprofits, sole proprietors, independent contractors. You can borrow up to $2 million in working capital, 30-year term, 3.75%. Payments are deferred for a year. They've reduced the underwriting. Loans are based on credit scores, no tax returns required, up to $200,000 without a personal guarantee, no collateral for up to $25,000. A new feature that they added was the ability to request, as you apply for a loan, a $10,000 emergency grant that does not have to be repaid. That grant by law is supposed to be given to you within 3 days. The reality is that all these loans go through the SBA. You apply at sba.gov, and there is a significant backlog, and folks have not been getting those grants within 3 days. If you apply and you receive one of these grants, understand that the $10,000 of forgiveness comes off whatever forgiveness you will receive, excuse me, under the Paycheck Protection Program. Finally, let me talk about 2 other aspects that don't come from the CARES Act, but the bill passed before that, the Phase 2 bill. The Phase 2 bill imposed requirements on employers with fewer than 500 employees. If you have fewer than 500 employees, as of April 1st, you are required to provide 10 days of paid sick leave to your employees if the leave is related to COVID-19. That means that your employee is ill, they're quarantined due to an exposure, or they have to take care of a family member who is, or take care of a child whose school or daycare is closed because of COVID-19. If your employee is out because of their own illness or quarantine, you pay them at the regular rate at a maximum of $511 per day. If they're taking care of a family member or child, it's 2/3 of the rate of pay, up to $200 per day. Importantly, we're used to unfunded mandates from government. This is a funded mandate. The federal government reimburses you 100% up to the daily maximum for the paid sick leave that you provide. There's been a lot of discussion about employers who could be exempt from this. Certain healthcare and emergency responders can be exempt. If you don't fall into one of those categories, but you have less than 50 employees, it's possible to also be exempt, but the exemption only applies to leave for an employee who's caring for a child whose school or daycare is closed, and if you certify as the employer that providing that leave threatens the viability of the business. And of course, if the employee can telework, the paid leave is not available. There's one other aspect of this that is paid FMLA leave. If your employee exhausts those 10 days of sick leave and they still have to care for a child whose school or daycare is closed, they can get up to 10 weeks of paid leave. It's still at the 2/3 regular rate of pay, maximum of $200. The federal government still reimburses you. The exact same exemptions for small employers with under 50 employees applies. Finally, we went through a lot here. We're constantly updating our guides. I mentioned the guide we had on the Paycheck Protection. We also have an employer guide for the economic injury disaster loans, an employer guide for the employee retention tax credit, and a guide for the paid sick and family leave, all on our website. Also at uschamber.com/co, we have resources and tips, survival tips, best practices that our team is collecting for small businesses. So I know I walked through a lot there, but we definitely want to get to your questions, and I will turn it back over to Mary Beth to get us started.
All right, Neil, thank you so much. We do have an awful lot of questions. So some of these might be a little bit redundant and things that you've already gone over, but I want to make sure that we answer everybody's questions. So thanks for hanging in there with us. Regarding employees who work exclusively for a single business that pays their payroll as 1099 contractors, Let's see here. Can they be included in the monthly payroll calculations? I heard there's a dispute about this between the SBA and the Treasury Department.
So the short answer is no, they cannot. As an employer, you cannot count 1099 wages that you pay an employee for purposes of the Paycheck Protection Loan Program. That is now settled. There was confusion, but that is settled. However, your independent contractors can qualify on their own. And so that will begin this Friday. We will be issuing, we're expecting new regulations and guidance on that in the coming day or so. We'll be issuing another guide designed for independent contractors that you can share with your independent contractors so they can access this program on their own.
Okay, great. For businesses that apply for both EIDL and PPP, if they take the $10,000 in advance from the EIDL, will the PPP loan amount automatically be reduced by $10K to pay EIDL back? And will $10K of the PPP loan end up being non-forgivable in the long run because of this?
So the first thing that happens is you've got an EIDL loan and then you're going for a PPP loan. You have the ability when you fill out your loan application to roll that EIDL loan over into your PPP loan. If you do that, it just gets added onto the top of it. If you took the $10,000 grant from the EIDL program, then whatever your loan forgiveness is at the end of the PPP program, they'll reduce that by $10,000. So the $10,000, you can't get the $10,000 twice. In other words, you can't get it once from EIDL and once in loan forgiveness from PPP.
Okay, great. Do you know if a taxpayer owed and used their checking account to pay the taxes that constitutes the IRS having the bank account information to deposit the money?
I don't know the answer to that. You are definitely going to want to check the IRS website for guidance to make sure that you receive your tax payment there.
Okay, gotcha. Restaurants in Nevada with gaming are completely disadvantaged by the SBA rules that make certain businesses with gaming revenue ineligible for assistance. Has any progress been made in having the interim rules updated to fix this problem?
It's definitely a problem. It's one we've raised. This is part of a collection of problems regarding both eligibility and affiliation that we've been working on with the SBA and Treasury. We have not made sufficient progress on those issues yet. So nothing has changed to date, but conversations are ongoing.
Okay, here's an IRS question again. Will an individual receive the $1,200 payment if they owe money to the IRS?
You'll want to check on the IRS frequently asked questions. I don't believe you'll want to check on the IRS frequently asked questions. I think it depends on what you might owe as to the definition of that.
Yeah.
There are
Okay.
different exceptions and categories, as I recall.
Okay. Here's another question. Can you seek the employee retention credit for employees who are receiving benefits but not receiving W-2 wages?
So we think that that's going to be the case. We've asked the IRS and the Treasury Department to provide guidance. You know, the obvious example of that is that you continue to pay your employees health, you furloughed them, but you continue to provide health care. We believe in our conversations with lawmakers who drafted this provision, they say their intention is for that to qualify for the tax credit, but we want to make extra certain that that's the case when the guidance comes out.
Okay. This is kind of a long question, so bear with me. We're a small business distributing supplies and equipment to the resort, salon, and spa market. 70% of our staff was furloughed 2 weeks ago. Due to the nature of our industry, it is extremely unlikely that we will be able to rehire any of our furloughed employees by the end of June per the PPP loan for forgiveness. Is there any consideration to extend the June deadline, giving small businesses a better chance to be able to take advantage of forgiveness?
Yeah, this is a question that's coming up increasingly. There's a lot of folks who are in a similar situation. There's a good argument to be made that when the PPP program was written by Congress, it was a couple weeks ago, but in this environment, a couple weeks is an eternity, and that the world does not look today like what it looked like 2 weeks ago. So we are talking to members of Congress about making that change, but it will require congressional action. So absent Congress changing the law, there's not much that can be done administratively. So my best advice to people is you're going to have, if you're thinking about taking out a PPP loan and you want to make sure that that loan gets forgiven, you got to look at the state of the law as it exists today. Hopefully it'll change, but we can't guarantee that.
Okay, very good. And this next question comes from our friends at the LVGEA, Elena Cowley. Any update on the 501c6 eligibility? A lot of us are interested in that one, Neil.
Yeah, so with respect to the PPP program, expanding eligibility beyond C3s will require a change by Congress. We've made a lot of headway with lawmakers who say they are sympathetic and want to make that change, but we have to have a vehicle to make it. That hasn't happened yet. It's still under consideration for the next phase 4 bill. There's also some issues that we continue to work through with the Small Business Administration regarding the ability of C6s to access EIDL loans. And some C6s appear to have been able to do that. Others have been told they don't qualify. We are asking the SBA administrator to provide clear guidance on that so that there can be uniformity kind of across the country.
Okay, great. This next question comes from Chair-elect at the Chamber, Gina Bonjovi. She says, also, please confirm that for PPP, income paid to an owner via a K-1 and not a W-2 cannot be included in average monthly payroll calculation. If so, this seriously impacts small businesses who don't happen to be taxed as sub-S corporations.
So this is one where we hope that there's guidance coming out in the next day or so that I mentioned that will clarify this with certainty, particularly for those small business owners. We think there's some flexibility there, but we can't say for certain until the new guidance comes out.
Okay. This next question, Neil, is from a member of the Assembly here in Nevada. For clarification, if a small business takes the loan under CARES, they are not entitled to the payroll tax credit. Is it one or the other?
So if you take the Paycheck Protection Program loan, you lose your ability to take the employee retention tax credit because the theory is you're doing that for the same employees. Right. And in addition, if you then have the loan forgiven under the Paycheck Protection Program, you lose the ability to defer your payroll taxes. I'm not exactly sure why Congress did that one. That doesn't make a lot of sense, but that's what the law says.
Okay. What is the latest you can bring back your furloughed employees and qualify? How does the June 30th deadline really work out?
So there are two periods you want to think about. Think about it this way. The first thing that happens after you get your loan is your expenses begin immediately qualifying you for loan forgiveness. But that period is from after origination for the following 8 weeks. And so imagine this, if you didn't pay any of your employees, you didn't bring them back until the 9th week, then you would have no payroll expenses during that 8 weeks. And so nothing to claim for your expenses to qualify for loan forgiveness. So the first thing you have to think about is I need to maximize my spending on payroll in particular, because that 75% of the forgiveness has to be tied to payroll, that I have to maximize my payroll for forgiveness during the 8 weeks after origination. You'll have to figure out whether that means I can bring my employees back in week 3 or week 4 or week 6. It'll depend on how much you borrow and what your expenses are. Once you've done that, at the end of that 8 weeks, you now know what your maximum amount of loan forgiveness is. Now the government does a secondary test and says, well, did you reduce your employee headcount or did you cut wages? And then they will reduce that maximum amount you're qualified for if, for example, you've reduced headcount before February 15th and June 30th. So you can be in a situation which if you're quickly getting a loan where you have the funds to pay them for the 8 weeks, and then if you're not fully reopened and have revenue, you could end up in the period where you have a problem maintaining those employees through June 30th. So I've talked to some small businesses who are thinking about it in those terms, because obviously, we don't know how long it'll take for a lot of businesses to return to normal revenue.
Okay. All right, very good. Here's an unemployment question. If an employer has reduced salary for an employee, is that employee eligible for unemployment?
So generally, if you're still receiving a salary, you have not been furloughed. However, there are programs, and I don't know if Nevada has one of these or not, where you have work share, where an employer, in lieu of completely furloughing an employee, can reduce their hours, reduce their wages, and a state-based program supplements that in lieu of the higher costs of having them on unemployment. The CARES Act provides additional funds for states that have those work share programs, and in addition makes it easier for states who don't to set up one, but this is something that's governed completely by your state law and your state programs, and it's just an option under the federal system.
Okay, very good. Next question. With the reimbursement for childcare, if an employee is working remotely because they can't come into work and making less money than their weekly average, how will that work?
So I think this is a question with regard to like the paid leave if you're taking care of a child. So if they're claiming the leave, they're claiming the leave because they can't work, right? If they can telework, then they don't qualify. You know, I think employers, I know some employers are thinking through what's the better scenario for the employee, right? Is it better that, you know, they're on paid leave, or is it better that they're doing reduced work? You'll have to figure that out kind of between, as the employer, between you and your employee. Just remember that if they are taking the paid leave, it's at 2/3 the normal rate of pay, no more than $200 a day.
Okay. Will any of these loans show up on your personal credit report?
So I don't know the answer to that. That's a great question.
Yeah, that one hasn't come up yet. Next question. We'll check and try to find that out and post that on our website. Can an employer make up the difference for Can an employer make up the difference for employers if the $211 amount is under their daily salary for staff forced to be at home with kids in school?
You may, remember this only applies to employers with fewer than 500, but you may do that. You just won't be reimbursed by the federal government.
Okay. All right, very good. Is the $10,000 disaster loan grant run through the SBA directly via their website or through a bank? If an application has already been submitted will that complicate getting this $10,000 loan?
So the $10,000 is part of the economic injury disaster loan. That is entirely through the SBA. You do not go to your bank for that. The only place that has an interaction with the bank is that if you've already got an EIDL loan, so you've already applied, you will want to note that on your application for the PPP loan with your bank, because there's the option to roll that over. And so it doesn't complicate, you know, kind of one or the other, with one exception. They are trying to avoid businesses borrowing $2 from two different programs for the same dollar of expense. So as you go for a PPP loan, you will certify on the application that you're not borrowing from EIDL or anywhere else for that same expense, because, well, in general lending, that's a no-no. You shouldn't, in general in life, they discourage you borrowing $2 for the same dollar of expense.
Right. Okay, great, thank you. If you own multiple businesses, can you apply for PPP under each business?
You generally can, but you're going to want to be aware of the affiliation rules. So if you have multiple businesses that you own, you control those businesses, then for purposes of employee size headcount, leaving aside if you're in the food service or accommodation. So if you're in food service or accommodation, ignore what I'm about to say. But if you're not in those sectors, then you have to add up the employees from all those different businesses, and that counts towards the size limit. So this is known as the affiliation rule. And so there are a lot of businesses, particularly businesses that may have been funded by venture capital or private equity, for example, who they don't even know what those other businesses are. But because they have common ownership, they all get to count together for purposes of determining the head count. If you add up all those employees and you're still under 500, you're good to go. You apply as one unit, but if you're above 500, you could lose your eligibility.
Okay. Can you clarify if healthcare and emergency responders are excluded from the EFMLA benefit?
Certain emergency responders, yes, and certain healthcare, you will want to double check on the Department of Labor's website. They have frequently asked questions that includes this, that includes references to what qualifies, and you're just going to want to check whatever it is you do, you're going to want to check that against that list to make sure that applies to you.
Okay, great. Do you know the interest rate on any portion of the PPP that isn't used for payroll, utilities, or rent?
1%, maximum 2-year loan. So you get a loan, the interest rate is set by the regulation at 1%. You do not make payments for the first 6 months, although interest accrues, and then the term of the loan is 2 years.
Okay. The next question comes from another board trustee at the chamber, Larry Singer. I am the sole employee of an LLC which I own. Do I qualify for PPP?
You could. In fact, you should. What you'll want to check is whether you're going through as a self-employed individual. That's probably the way you're going to want to do that, and that would be eligibility on Friday. This again is the issue that we're looking for guidance. Understand that the amount that you're going to have available is going to be limited. So, for example, for individuals, the sole proprietors, the independent contractors, they will consider a maximum income level in terms of your earnings of $100,000, and then take 2.5 months of that. So 100,000 annual, 2.5 months. I think that's around 20. I'm doing my math right, not a little over $20,000 is the kind of the maximum available loan.
Okay, very good. If I take the grant for $10,000, do you have to take additional money for the loan?
No, not necessarily. And in fact, you can be denied the loan and still keep the $10,000.
Okay. All right, if a company already offers PTO, is the paid sick leave on top of already provided benefits, or is the paid sick leave only an option if the company doesn't offer paid leave?
No, it is on top of whatever benefit you already provide.
Okay, very good. We operate movie theaters. If we bring back all employees prior to opening to the public and earning revenue, are we still eligible for forgiveness of the loan? Will there be any requirement to validate actual hours worked, or can our employees be paid for working from home even in a retail environment?
The intention of the lawmakers and the way everything so far reads, they don't care if you're working or all they care about is that you're paying your employee, and that qualifies. And so in that environment, you could have employees at home who you just continue to pay, and that qualifies for purposes of the loan forgiveness.
Okay, great. When will the SBA loans or $10,000 grants be funded? What happens if my loan is not funded by June 30th, 2020?
So remember the June 30th deadline, that's for the PPP. That's separate for the SBA EIDL loans. So there's concern that both programs could run out of money. The $10,000 grant was funded at $10 billion, which sounds like a lot of money, but that's only 1 million small businesses across the country. So we are watching that as to whether that might run out. If it does, Congress will have to appropriate more money. The PPP, this is the larger loans. This is your average monthly payroll times 2.5. So that's at $349 billion. There's also concern that that's going to run out of money. And so we've asked, and the president's requested, and Senate Majority Leader McConnell has indicated that they will move a bill as early as tomorrow to add $250 billion to that program. I really believe that Congress is not going to allow a situation to occur where, someone who was the 499th person in line gets a loan, the 500th person gets a loan, but everyone after that is just too late because they ran out of money. They will add the money that's necessary to keep this program going.
Okay. Can an employer require a doctor's note if someone's stating they need to stay home with a family member or themselves?
So there's good guidance on this in the Department of Labor's that Q&A, and so you'll want to check that because there are particular requirements around that I don't want to mislead you on.
Okay. Chamber Chairman Tom Burns is weighing in with a question. Is the forgiveness of debt under the PPP program a taxable event?
It is not.
Okay, there you go, Tom. Okay, next question. Do you have an estimate on time for how long the SBA is taking to process the EIDL application?
No, I mean, the good news is we do hear from people who are having them processed and are getting things done. We also hear from other people in other parts of the country who've gone 4 or 5 days and haven't heard anything. Some people who've gone a week. So we know that they're working through it. We know it's happening. It's just happening very slowly, particularly in some parts of the country where there's just been a lot of applications.
Yeah. Okay. I know everybody's really eager here, and with due reason. I'm applying for the PPP for a company I manage. I also run a nonprofit organization with a different EIN and would like to apply for EIDL. Will this present a conflict?
So in general, no. However, you are going to want to be aware of affiliation rules. So the affiliation rules also generally apply to nonprofits too. So it's possible if you are deemed as controlling both organizations, that they could be affiliated for the purposes of the head count. So I suspect that that's highly unlikely given what you described, but I know of one instance where that was in fact true because the nonprofit was so closely linked to the other entity that they were considered affiliates.
Okay. All right, very good. We still have quite a few questions coming in here, but just want to make sure that we get everybody's questions answered. I know we just have a few more minutes. Can you clarify if the payroll protection program is available to any business or any 501c3 nonprofit, or are there certain such restrictions such as the number of employees or revenue? I've gotten that question several times, so I just wanted to clarify that again.
Yeah, so in general, if you have fewer than 500 employees, you qualify as a small business, and you qualify for PPP as a nonprofit with fewer than 500 employees, as long as you're one of those C3s. There are other, in the SBA regular rules relating to size, there are also some other qualifications that relate to certain industries where you can have up to 1,500 employees. There's also a special exception if you are only been in business a couple of years and you have revenue below a certain threshold that you can qualify for as well. So what you're going to want to do to check to see if you qualify, if you're above that 500 and you're worried and you think you might apply to an exception, you're going to want to check the SBA size determination guidelines, and that will help you figure out if one of those exceptions applies to you.
Okay. All right, very good. What power do the banks have? What power do the banks from the Fed have in prioritizing who gets the loans? This person is hearing horror stories of banks denying.
So there are no requirements with respect to that, but let me tell you from talking to a lot of the banks what is going on. So banks also have some obligations under this. One of the obligations is to comply with things like know your customer and anti-money laundering rules. And the way that that's being done, if you already have a banking relationship with the bank, they've already complied with those requirements. And so the easiest folks for them to process first are the ones who they already have that relationship with. That said, we also expect there are a lot more lenders who are coming online. We also expect fintech companies to be authorized, a number of them to be authorized to provide these loans. So there's going to be an increasing number of options. You may have also heard about some banks who, quote, hit their limit and can't provide any more loans. As you know, banks, to keep banks solvent, there are limits on how much they can loan in general relative to the assets that they have, right? That's why it keeps banks from going insolvent. Some banks have run up into that because they're making so many of these loans. To fix that problem, the Federal Reserve this week is likely to create, they've announced that they're going to do it, and they just haven't done it yet. They're going to create a program to basically take those loans off the books of those banks. Actually, they're going to swap them out with. It doesn't matter. What they're doing is they're making it work so that the banks will have more liquidity. It's a complicated transaction I was about to describe, but the important thing is banks will be able to make more loans.
Yeah, we've been hearing from a lot of our members about that as well, so that's a big issue right now. Next question, for affiliation purposes, our company founder has started multiple entities and owns shares, but is not part of running the business. Are all the entities that he has invested included in the affiliation total?
It depends. So what you're going to want to check out is at treasury.gov, you'll see a red bar at the top with a link to information about Paycheck protection. One of the guidances that was issued Friday night or Saturday morning towards the bottom is affiliation rules. And so they walk through. So, if he owns the stock and he's the majority holder, it probably counts for purposes of affiliation. If he's a minority shareholder, less likely, although if he has veto rights, that gives him effective control. And so they've walked through the multi-part test that you have to go through if you're in that situation. And that's the paperwork you should go through to figure out whether you qualify.
Okay, very good. Well, Neil Bradley, I can't tell you how much we appreciate, your time today. You have been just relentless at answering all of these questions. I've been on several calls with you, Chamber of Commerce Committee of 100, and you're so knowledgeable. And on behalf of the members of the Chamber in Vegas here and all across Nevada, we appreciate your time.
Well, thank you, Mary Beth. I'm looking forward to getting out there and visiting Vegas when all this is over.
Well, we would love to have you. You're welcome anytime.
Well, thank you. Have a great day.
Right. You too. I also want to say thanks to everybody else for joining us today. As new issues come up and new information comes up, we here at the Vegas Chamber will be sure to get that information to you just as soon as we possibly can. We appreciate the support of our Vegas Chamber members, and please know that the Vegas Chamber is here to serve you, and together we're going to get through this. So Neil, thanks again, and thanks to everybody, and we'll see you soon. Bye-bye.